FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's 12/24/19. Well, we had a China trade deal. I know it's old news by now, but it really isn't. What was that deal about? What did we give? What did we get? Did anybody give or get anything? Well, I think the Chinese got some soybeans out of the deal and probably some corn. Who knows? Maybe we're sending them hogs. Maybe we're sending them cows. But be that as it may, let's talk about this. Let's get more of an insight into it. And as always, we want to know your opinion about the China trade deal. Tell us. Email address, write us, kl@kerrylutz.com. Well, Jeff Socha is on with us again. And Jeff, it's great to have you back. So all this China agreement really was an agreement to agree at some time in the future, which is the definition, by definition, a letter of intent from when I was a recovering attorney. And so really, we didn't really give much up. We didn't really get much back other than we get to sell agricultural products to the Chinese.
I don't think I could say it any better than letter of intent. You know, they talk about it as a multi-stage or multi-phase deal. And I think that's appropriate. You're talking about restructuring trade between two of the largest economies on the planet that are kind of codependent. I mean, and if you think about the trade, you know, there's this kind of symbiotic system between U.S. and China, where China needs to maintain the low currency so they can produce at a low cost, so they can feed the United States with products. And we need to have good trade so that we can continue outsourcing and importing and using China for our purposes. So I think both sides need the deal done. And I think, you know, as we've discussed before, going into this 2020 election period, this would be a hallmark win. You know, we've got tax reform. The stock market is you know, all-time highs, going in the right direction, and doing some pro-America trade deals and winning some improvements that are good for America and putting us in the right direction are going to be great. The challenge is going to be to see whether or not this deal comes through and gets signed and how significant of a change it actually is. Like you said, hey, it's a letter of intent, kind of saying this is what we plan to agree on, but we've seen people pull back from the table.
We've seen Trump do it in his real estate deals. You know, this is classic Trump when you get down to it. I'm not being skeptical here. Don't get me wrong. I just think that maybe Wall Street's perception of things is a little bit cloudy here, shall we say?
You know, what's interesting about Wall Street is it seems like they're getting used to the back and forth. Maybe everybody went out and bought the Art of the Deal book and read it, and they said, oh, we get this is how he plays the game. But it seems like in the past, there was a lot stronger reaction in the markets, in the news. Trump would tweet something, and if it was good, markets rally. If it was bad, markets go down. And now we start to see where we're having an evolving trade deal, and I think everybody's just kind of gotten used to the you know, the tweets and the headlines coming out, and they realize, okay, I think people are calming down and saying one way or another, going to get a deal, and it's probably going to be better than what we had before, and it's going to ruin our economy. You know, there are some parts of the economy that, you know, like an agribusiness where they feel like they've been hurt more by this new tariffs and whatnot. But I think at the end of the day, people are starting to realize this isn't going to be a bad thing. It's going to be a good thing, and it's just a matter of how good it is. And so I think you're starting to see the markets and the economy kind of return to business as usual.
Interesting. So effectively what you said, I don't know if you were trying to say this or not, is we're seeing kind of what you would call I guess, Trump fatigue, right?
Sort of. You know, I think what you're starting to see is maybe belief that this is going to go in the right direction and it's going to be good for the country, and whatever the outcome is going to be positive. So then when you kind of have a setback or things kind of aren't progressing as fast, or somebody pulls back from the conversation, or whatever happens in normal negotiations of this size, I think what you're not seeing anymore is kind of this scared free fall, drop in the market. Oh my gosh, what's happening? China's not going to talk. And so I think there's a sense of greater confidence that something good is going to happen.
Yeah, I think there's an understanding of the way Trump rolls, of the way he plays this game that wasn't there before, and Wall Street is more able to take it in stride, I guess, right?
FSN Radio. It's all about what's next.
Otis Gold Corp is a gold development and exploration company with quality projects in the pro-mining state of Idaho. Otis's flagship Kilgore project has a resource of 961,000 gold ounces, and its recently published preliminary economic assessment demonstrated an impressive post-tax IRR of 53% at $1,500 gold. In addition to the significant expansion potential at Kilgore, Otis is exploring its highly prospective Oakley project. This Carlin-type gold deposit already has an inferred resource, and previous near-surface drilling intersected 123 meters of 0.69 grams per ton gold. Otis Gold Corp trades in New York under the ticker OGLDF and in Toronto under the ticker OOO. That's triple O. To learn more, go to otisgold.com. That's otisgold.com.
The Financial Survival Network. It's all about what's next.
Yeah, and when we've talked before, I know that you really love sprinkling in the impeachment news, but I think that's going to almost take away from the China trade headlines, and if anything, people are going to focus more on that to say, okay, well, what's going to happen there? Although I'm not sure that that's going to really have an effect. I think Trump seems like he's going to proceed business as usual and continue pursuing the trade deal. So I don't know that that's going to have a huge impact, but I think at least the media is going to drift that way.
Yeah. Hey, well, look, I think when you're dealing with Trump, his MO is to always keep his adversaries off balance. And whether it's trade or whether it's the flunkies in the legislature, the Senate, and the House, they never know. Yeah. I just remember he's using the Forrest Gump rules of engagement, which, as he said, my mom used to say, life is like a box of chocolates. You never know which one you're going to get. Well, Trump is like a full setup bar, and the bartender is just pouring blind, and you never know whether you're going to get tequila, mezcal, or cognac, but you're going to get something.
Yeah, you're going to get something. And I think, I think what we should look at really are the positives. We've got a lot of positives. We've got some trending indicators showing expansion in the economy, showing a less likely chance of a recession. Markets are going gangbusters. Unemployment is low. We're improving our trade deals with foreign countries. There's so many positive things stacked up here that I don't see the need to get really concerned over the China deal. I mean, you look at different acquisitions that are happening, international business. I mean, PayPal just acquired GoPay, which is a Chinese payment system, and so you're starting to see big companies, even in financial space, start to do more business with China, and I think the confidence is going to be there. And China is going to play along because they need us to continue buying from them, and so I think at the end of the day we've got to be positive about this. I don't see too many reasons to be negative on the U.S.-China trade negotiations. I think it's a great thing that's happening.
Yeah, I don't think we've given anything up here either. I really don't see it.
No, I don't think we're giving anything up. So, I think the United States is going to win. It's just a matter of what that ends up looking like and how big of a win we get. But the United States is going to be better off for this trade deal.
Well, let me put it this way. I've won and I've lost, and winning is much better. Right?
Yes. And, I think that the markets are starting to see that, and so I don't see how this trade deal. I think what's really going to happen is it's going to kind of fade into the background. I think other headlines are going to take over in the 2020, and it might have dominated headlines in 2019. But I think it's going to get sorted out, and everybody's going to be okay with it, and then we're going to move on with life.
Hey,
that's where I think the U.S.-China trade deal is.
I think you're right, because. Look, China has got like a lot of issues. Now, we always tend to look at our competitor and see only perfection. And the fact is, there's a lot of issues that they're going through now. Hong Kong is spreading. I think many of you out there don't realize that Hong Kong is really spreading, and it's becoming, it's really becoming something that
I think, yeah, you're right. And we've got great progress after what happened in Hong Kong because, the Congress put forth a bill for, essentially saying, hey, now we've got to consider human rights versus the economy. And China acted like they were going to be tough and say, stay out of our business. But, at the end of the day, we said, you've got to address the human rights issues here and freedom and the things that the United States stands for. And China seems like they're going to go along with it. I think the leadership in China recognizes the need for our relationship, and they've got to go along with some of our points in the deal.
Yep, I totally agree with you here, Jeff. So looking forward down the road here, we had these economic experts telling us yield curve inverting, recession imminent, and it just reminded me of that 60s or 70s, I think it was probably 60s, TV show Lost in Space, where the robot would start going off whenever anything happened. Danger, Will Robinson, danger. And we've been hearing these naysayers saying, danger, Trump, danger, and he's ignored them. And so far, so good. But at some point, we've got to have a slowdown. We got to have a recession because there's been so much excessive speculation that it has to work that way.
Yeah, I think so. One thing that I'm looking at, though, is Morgan Stanley's business condition index rose 4 points this month to 52, which is the first time it's been over 50 since July. And a reading over 50 means expansion. So that's a real positive indicator. We've seen some other indicators go down that represent the risk of recession. I think we still have probably some kind of melt up happening here in the market. Yeah. But I do think we should pay attention to retail numbers. It seems like that area seems to be slowing down and potentially to be flat there. But, something to think tactically. I think Trump kind of needs the market to reset to a lower point for 2020. So a small pullback doesn't hurt. I mean, the markets are up 25% this year, all-time highs. This is an incredible year. But if we do have a small correction, and going into 2020 with starting off with a small correction, it allows for to claim bigger gains come November throughout the 2020 year. So if it's down earlier in the year, we can say, hey, that's due to the Democrats causing all this problems with impeachment and not running the government, and then we get the economy back on track and the economy recovers. So a small pullback here wouldn't be the best thing. But if we're looking ahead next year, and I'm thinking about what the administration's focused on, if they can go in saying, hey, we've got tough on China, stock market's up 25%, trade deal in favor of America. There's a lot of things there that going to be good for us, good for the country, good for business. So I think the general sense is, at least for 2020, we're looking at a positive year. Yeah. Now, what happens? 21 is 21 is the year that I think is a question mark. But 2020 looks like the economy is going to be really tough to stop.
Yeah, I'm inclined to agree. And right after that is probably when we'll have our recession. Right after the election. I mean, they're pumping so much money into the economy here. I mean, let's face it. We're having a huge, the deficit, everything else, right?
if I was going to speculate, which I don't think anyone knows exactly when a full-blown recession would hit, but if I was a gambling man and going to speculate on it, I think 21 would be a good bet.
Yeah. Yep. Agreed. All right.
Potentially even, November of 2020 might be where it starts.
Yep. Could well be the case. Well, the thing is, half the time we never even know we're in a recession until we're almost out of it. Right?
Yeah. Yeah. It's hard because especially with what we've seen out of the markets. I mean, even last year in 2018, we saw a second half of the year take a good dip. And so, everybody feels like it's coming. So what happens is you see the markets pull back a little bit. Everybody thinks, well, is this the big drop, or is this just a little bit of a correction? But when you have, when you have a market that grows 25%, and if it pulls back 5%, that's a healthy thing. It's not something to be scared of. You need that to happen. It's an expansion and contraction cycle. And so, a recession is going to be a greater than 20% drop. But so when we see these 5% pullbacks, I think it's a healthy thing. It doesn't just go straight up. So I think those are really healthy opportunities. And over the next year, I think we'll see some of those. We might see some of that happen here in the immediate future. But I think those small corrections are healthy to sustain the market as long as it has been. So if it weren't for those pullbacks, like we saw second half of last year, we might not have had as good of a year this year.
Very true.
So those are healthy things and not something to be afraid of. I think if you're planning on what to do in the coming recession, if it's your business, you want to make sure that you have a solid recession plan in place. Hey, what happens if my sales are down 20%? If my revenue is down 20%, what does a stress test on my business look like if things are down 20%? And how do you take advantage of that? If you have a lot of liquidity on hand. If you have a lot of liquidity that's not going to be down 20%, you're going to be the one that gets to seize all the opportunity when the blood's in the street. So
absolutely,
you'll be on a shopping spree.
Hey,
buy up your competitors, bring on talent, buy real estate, invest more in stocks. So have some safe liquidity.
Absolutely, Jeff. When I was in business, I used to be a follower of the Dow theory. And when I'd see the markets start to head down, and this was a lot more when everybody rested on everybody's view of the market, the economy rested on what the Federal Reserve did or didn't do. And, when I saw them raising rates and markets start to head south, I would give instructions to all of my people, bring in the money, let's collect as much from receivables as we can, liquidate as much of them as we can, so we're less exposed when this eventual recession hit. And, 9 times out of 10, I would be right, and we'd be well positioned for when the recession did, in fact, hit. Because, one of the hallmarks of a recession, less people able to pay their bills. Hey, in any event, we've got to run along right now, but we find you over at ARK Financial. Just give us the website.
Yeah, come see us at arkfinancial.com. And of course, you can find us on all the social channels too, but come see us at arkfinancial.com.
Excellent. Hey, and we'll have a link to ARK in the show notes to this interview. And just check us out. The Twitter feed is at Kerry Lutz, Facebook page, Financial Survival Network. Our home is financialsurvivalnetwork.com, and you can sign up for our free newsletter. Appreciate you coming on, Jeff, and we will talk to you again real soon.
Been a pleasure, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.